Alright guys, it's been a while, but let's just jump straight into it. We will be doing basically the weekly outlook, what I'm expecting in the week to come, and I might graze on the week that was, but I won't be covering on too much in this video. I'll just go over the essentials. Starting off with the NASDAQ chart, we will jump straight to the daily time frame. On the daily and even the higher time frame like the weekly and monthly, we will be able to see here that we were expecting a push up to the upside, a continuation to the upside, using this weekly fair value gap residing over here, right? And price did push up, but we can see we kept on taking a high, taking a high, taking a high, and now we are having a strong bearish closure in the with the previous weekly candle. So I'm expecting this next weekly low to be the draw on liquidity. And going through that, we have this low, this sell side liquidity here at 19,818. So that's my draw on liquidity moving on, going into this coming week. Looking at the daily time frame, we can see that we created a daily fair value gap as well that could be used to create the possible high of the week before continuing lower. Something to note in this week though is that this is the election week, right? So on Tuesday, in the USA, the elections are going on, and this should create some level of volatility or liquidity injection in the market. But personally, strictly speaking technical, I am looking for lower prices, and I'm looking for this sell side liquidity to be tagged in the next week, in the coming week. The thing that I wanted to mention is the fact that I don't think that we even need to tag into this daily gap, because I'm looking at this last bearish candle that was supposed to be a bullish order block. Let's actually backtrack for a bit here. Right here, when you see this as the all-time high and as a drawn liquidity, and you're seeing this order block being respected with this fair value gap, right? Over here, what are you going to expect? Well, you would expect the next candle to be an expansion candle to clear the all-time high, which is what I was expecting. But now that we actually went along and closed below this down close candle, the one that acted as a bullish order block, now we could potentially see it act as a bearish breaker. In other words, the body, especially of the candle, the closing price of this candle could act as a resistance in price. So the very next day on Friday, we came along and made the high on exactly where that body is. So in other words, if I was trying to sell this market, I would have entered my sell position right there, with my stop loss being at the high of this day, the high of Thursday. If you want a safer stop loss, the last bullish candle before we fell off will be my safer stop loss, but this is my drawn liquidity. So on the NASDAQ, I'm expecting lower prices, but we might not even need to go into this gap for us to drop lower. Let's move on to ES. I'm basically expecting the same thing. I was expecting higher prices before. We have the 6,000 psychological level sitting up there as my higher time frame or longer term view drawn liquidity. When you look at ES, we have these relative equal lows right here, very close to clearing it, and I really don't see us moving back up into this deep premium in order to continue lower. We actually have the volume imbalance there as well. So if you ask me to go on a lower time frame and look for an entry, I would say the entry has already started. We already created the first hourly fair value gap over here. It's a tiny one, but it's over there. We have also inverted this BC over here, so I'm not expecting this high to be swept, this specific high. So we could see this candle right here, this bullish one, act as a bearish order block for us to continue lower. on ES. So yeah, this is a possible move that we could see early on in the week, but because ES is weaker than NASDAQ, we could have this liquidity void as our next draw on liquidity going through these relative equal lows. That's my insight on ES. And then the one that I'm actually going to be looking at personally and trading personally, surprisingly, is the Dow. I don't want to show this. I don't want to make it seem as if I'm giving a signal or something like that. So let's open the continuous contract for YM and drag it to where it needs to be. Come on. Right there. So on YM, I'm actually looking for more extreme sell side liquidity draw, which is all the way over there. On YM, we can also see that we are respecting this last up close candle as a possible bearish order block. So I am actually looking for lower prices. When we look at the 1 hour for confirmation, we have the same thing or similar stuff as ES, because we also just inverted this imbalance over here. We respected it over here. This candle could act as a future bearish order block when we close below the entire candle. So yeah, and this to me looks like a clear accumulation over here, a clear manipulation over here. So I'm looking for a distribution lower over here, and I'm expecting that to happen on Monday and Tuesday, being the election, very quickly, because I think the election will clear the sell sides first before we look for continuation higher in the other half of the week. But of course, it's a very volatile week, and I cannot stress enough on how careful you should be trading these markets, especially with the economic calendar for next week. It's a very important news event. It's not something that should be taken lightly in any way. Let's move on to gold and silver, starting off with silver actually, and not gold. On silver, I'm looking at the weekly time frame. The buy side liquidity over there, I labeled it as monthly buy side liquidity. When we zoom into price, we can see that we have this proportion block, well, basically order block, this last down close candle before we pushed up. We also have this weekly imbalance over here. So I'm expecting this order block and this fair value gap to support higher prices. You do not have to enter blindly from this fair value gap. I would urge that you look for a lower time frame confirmation. In this case, since we're working with a weekly PD array, we can look for confirmation on the 4 hour. So say for example, we closed above this area. Let's set an alert actually and label that as our H4 bullish order block, right? So let's say for example we closed above this candle, this becomes our bullish order block. Then we could have a setup that looks something like this, targeting that monthly buy side liquidity. So it's as simple as that. Rather wait for the confirmation. It would be nice if we get an SMT as well and all that good stuff. So for now, I would say just wait for more clarity. The same goes with gold. We have the 2800 psychological level sitting up there and a possible continuation higher using the same weekly chart. Gold, I would not be surprised if it comes into this weekly fair value gap. Then we could have some sort of weekly internal to external range liquidity, something like that, right? From the fair value gap to the high. Very possible, very likely, something to keep an eye out on. So that's what I'm looking for on silver and gold. Moving on to the dollar index, I'm looking for higher prices. It's as simple as that. Last week we had an immediate rebalance with this previous weekly candle. We came, tapped it, the wick, and then immediately rejected away from it. We also have now disrespected this CB. We've closed above it and using it currently as some level of support to potentially run for this daily swing high, this daily buy side liquidity. When we go on a lower time frame like the daily chart, for example, we can clearly see the expansion from tapping this order block. So NFP happened last week. NFP rejected aggressively away from this down close candle, away to try and possibly make a new high. So for me personally, since we have now closed above this down close candle, I'll be watching the wick to body and not necessarily the body I'll be watching the wick to body to see if it could be used as a continuation area for higher prices. That's my very short insight or view on the dollar. On the hourly, we can actually see that a little bit clearer. We can see that we have accumulated here, manipulated during NFP, immediately rejected away from it. So we could just see a retest of this general area, then a continuation higher. When we go to the 4-hour time frame, we can also see that area is aligned with a fair value gap. So I would not be surprised if we retrace down to this fair value gap on the 4-hour, then continue from here. So this is my very short view on DXY. This is perfectly aligned, in my opinion, with euro dollar. On euro dollar, we have that potential sell side liquidity down there, and SMT at the highs here. Notice this high that was created on Thursday was swept on Friday, right? So we swept the highs on euro dollar. When you look at GBPUSD, GBPUSD failed to sweep that high. You can actually see GBPUSD making new lows. Lower highs. So I'm looking for lower euro and lower pound. And yeah, we don't even need to retrace back to any deep premium for this to happen. So for example, we don't need to retrace back all the way to this other block. Of course, it would be nice if we do sharply on Monday, then that will give us the best entry to sell euro dollar. On the hourly time frame, we really do not need to get there, because I'm looking at this as a possible market maker sell model, right? If we decided to grade this range from the initial consolidation low to the smart money reversal, grade it into quarters, typically speaking, around the 25% is where we get the low risk entry actually. And we can see there we made a possible breakaway gap. It would have been nice if price retraced here, then that would be a clear 25% entry. But now that we're creating solid bearish closures, keeping in mind that this is an hourly time frame, solid bearish closures, I'm looking for a possibility of us just retracing maybe to this candle, this up close candle, for example, then just continue lower. We might make another breakaway gap around the 50% area, then we continue lower. But keep in mind, right now, this is the only PDRA that I'm looking at. I'm looking at this BC to potentially act as an inversion gap. I'm looking for us to close lower below it, a retest of some sort, or even an order block or a breaker, and a continuation lower. I'm not looking for us to retrace back to a deep premium like this CB all the way up there. So that's my insight and my view on dollar with EU, and of course the same applies with GU because they have a similar structure, right? So we have the SMT at the highs displacing lower. We have a new gap that's now being inverted. We have already closed below it, so we could look for a retracement up, maybe even to this BPR where we have the CB as well, then a continuation lower to the sell side liquidity. So that's my insight on DXY, EU, GU, and of course the indices that I've already gone through. Then obviously I threw in gold and silver in there to complete the mix. So that's what I'm looking for. Of course, if we see anything clearer, if I have any updates, I will upload it on the channel. So please do not forget to like the video if you do like it, subscribe below if you haven't already, then most importantly turn on the bell notification, the icon down there next to the subscribe button, and you'll be able to get my intra-week updates, especially after the elections. So yeah, but for now, that's all I have. Stay safe, good luck, and as always, good trading.